One thing you gotta understand is the stock market is for the long haul, right? If you are investing in the right things, right, you'll make almost guaranteed money over long periods of time, 10, 20, 30 years. Right? I can't guarantee you anything, so I hate to almost use that word. But, if you are investing in the right things, there's a really good chance that you will make a lot of money over long periods of time. Right? If you don't operate out of fear and you have wise counsel.
Hi, I'm Justin Buonamo, and this is Wisdom is Wealth. Wisdom is Wealth is designed to give you guys practical insights, modern strategies, and even timeless philosophies around gaining wisdom in your life. The wiser we get, the wealthier we will become. This podcast really is inspired by the book of Proverbs in the Bible, which was written by King Solomon, who prayed to God for wisdom and as a byproduct became the wealthiest person to ever live. If he was still alive today in present day, he'd be worth $1.3 trillion with a T. Not because he prayed for wealth, but he prayed to God to give him wisdom. And as he grew wiser, as a byproduct, he grew wealthier, particularly financially, but not just stopping there, in every facet of his life. And in my own life, I have realized that the wealthier I become, it's truthfully just because I have become wiser in life. I'm gonna bring on guests that are incredibly successful, incredibly amazing human beings, and have an amazing financial wealth that they've grown for themselves. And they're gonna share wisdom on their life experience in totality in hopes that something becomes valuable for you to implement in your process, in your life, and in your journey, and see how wisdom truthfully is wealth.
Welcome back to another episode of Wisdom is Wealth. I'm pumped to have you here today. We're going to talk about a topic, or the topic of today's episode is called Understanding the Stock Market, which, whether people admit it or not, they're very confused by the topic, I find, especially believers. But it's just a confusing topic in totality. And I had this aha moment, I think it was back in February, where I had a virtual event and we had close to 100 people there. And I asked for aha moments. One, I think it was the second or third day, right? And it was the day after I taught about the stock market. And I'm thinking people are going to put aha moments in the chat about, some spiritual breakthroughs they had through, some budgeting habits they picked up on, the strategies we taught them about debt payoff or savings. And almost every single person dropped in the comments that their biggest aha moment from the past day or two was how I taught about the stock market, how easy it actually was, and how even they didn't even know the true definition of what a stock or bond actually was until I taught them it in a very easy manner. And so the funny part is I almost didn't include that in my presentation. Is this overkill? Is this too simple? Do people know this stuff already? And I'm so happy I included it because it was the biggest aha moments of the group. And so I figured today, let's just talk a little bit about the stock market to make it easy for you, and then also to make it clear on how you should possibly act on it. And then at the end, I'm going to root it in biblical principles. And so even if you know a little bit about the stock market, have money in it, hang out with me. You're definitely, I don't care who you are going to learn something today, or at least get a nugget of wisdom that you're going to walk away with feeling much better, not just about the stock market, but with your finances in totality. And so again, today's episode is called Understanding the Stock Market. And the first thing we're going to cover today is understanding what a stock is, what a bond is, and what an index fund is. And so stocks, simply put, are just ownerships in companies given to you in a form called a share, right? And so if I buy Nike stock right now, I am now a part but small owner, depending on how much I buy, owner in Nike. So when you buy a stock in a company, you're buying ownership in that company, and they issue that ownership to you in the form of what's called a share, right? That's literally what it is. Stocks are ownerships in companies, right? Bonds are loans to entities that you make money off of. And so the riskier the entity, the more money you can make. For example, the least risky bond that you can purchase and or buy into is what's called a treasury bond. This is a government-based bond. This is basically you giving a loan to the federal government. And that is very low risk because the federal government don't give you your money back, most likely, right? And so the reason, or because it's such low risk, is the reason why the return on investment's a lot lower. So point being, your average treasury bond, depending on the year, depending on what you're investing in, is going to make you about 2 to 5% per year, right? That doesn't sound like much, but there's almost zero risk involved with investing in this treasury bond. So the level of risk matches the level of return. So little risk, little return. But if I was to give a bond to a startup company, which is much riskier, yes, the risk of me losing my money or not getting my money back is a heck of a lot higher, but the money that I can make on that bond is also a heck of a lot higher, 10, 15, 20, 25%, and so on. So all a bond is a loan to an entity. The riskier the entity, the more money you can make. The least riskier the entity, like a federal government or a treasury bond, the less money you'll make. That's simply it. A stock is ownership in a company. A bond is a loan to an entity. And the last thing here is an index fund, which is just a collection of stocks that you buy as a package. I'll give you an example. An example of one is the S&P 500, right? The S&P 500 is just a collection of the 500 best companies in the United States. So when you can literally go to Robinhood right now or whatever other trading platform where you can purchase stocks, and you can purchase a share of the S&P 500. When you do that, you're buying a little sliver of ownership in the top 500 companies in the United States. And so instead of me going and buying Meta stock or Nike stock or Apple stock or Amazon stock individually, right, I can buy a share of the S&P 500 or what is called an index fund, and it buys shares in multiple different companies. So it's a collections of multiple different stocks that you buy as a package or a bundle by buying one index fund. So that's literally the first thing that I wanted to go over. Just what is a stock, what is a bond, what is an index fund, and teach you them just simple definitions, right? Because before you could act on something or get the best out of something, you have to actually understand what it is in the first place, right? And so that was literally, like I mentioned, the biggest aha moments that people from a couple of workshops ago had again, I was not expecting that, but like, yeah, just understanding now finally what a stock is and what a bond is, it was my biggest aha moment. And so I wanted to share those definitions here with y'all today. And the next thing that we're going to go over when it comes to understanding the stock market is aligning expectations on how you actually make money in the stock market, right? And so one thing you got to understand is the stock market is for the long haul, right? If you are investing in the right things, right, you'll make almost guaranteed money over long periods of time, 10, 20, 30 years. Right? I can't guarantee you anything, so I hate to almost use that word. But, if you are investing in the right things, there's a really good chance that you will make a lot of money over long periods of time, right? If you don't operate out of fear and you have wise counsel, right? But the stock market doesn't always go up, right? It actually drops a ton, right? But you will win over the long haul, right? So like, it's not just like this clear trajectory that goes straight up all the time, right? It goes up, down a little bit, up, down a little bit, up again, down a little bit. But over a long period of time, it goes up with some ups and downs along the way, right? And so over the past 75 plus years of the stock market, it's a proven fact that every 3 to 5 years, the stock market will drop into a bear market, or this means that the market has dropped by 20% or more from recent highs, right? And so let me back up and say that again. Over the past 75 years in the stock market, if not more, it has been proven that every 3 to 5 years, the market will hit a bear market, which means it'll drop by 20% or more from the most recent highs, right? But the only time you lose money in the stock market is when you pull money out. So for example, when the market drops and it goes down by 20%, you're technically only lost money on paper temporarily, right? Because if you don't pull money out and you let it ride out, aka bounce back, it will. And you technically don't lose money in the grand scheme of things. The only time when you lose money in the stock market is when you pull money out. So if the market drops by 20% and you get scared, which is what happens a lot of times, and you pull your money out to try to cut your losses and limit the bleeding, you lock yourself into that 20% loss. But if you let it bounce back, a lot of times, again, if you're invested in the right stuff, I can't guarantee anything, but it most likely will bounce back, because after every winter comes spring. And the crazy part here is that same 75 years that we just talked about, over the past 75 years, every 3 to 5 years, a bear market happens. Over the same 75 years, every single time a bear market has happened, it has been followed by a bull market, which means that the market has increased by 20% from recent lows. And so basically what I'm saying is it recovers every single time, like every single time. And that's just, I'm not making that up. Go look that up, right? And so that's just the concept of after every winter comes spring. And so I think that these things are really important to know, because the financially savvy do not look at a bear market or a drop in 20% as a problem, but instead they actually see it as an amazing opportunity, because this is a time that you can buy the best companies in the world on clearance. So savvy investors what I'm saying is a lot of times, like, they're almost hoping for a bear market or hoping for a drop, or you might have heard of the concept called buy the dip, right? Because things are going to dip, markets are going to drop, and that's actually an opportunity, not a problem for savvy investors, right? It's not most people. I think the average person that doesn't know investing, that acts out of fear with finances and, isn't financially literate, they pull their money out during bear markets. The financially savvy, they put their money in. When COVID hit and everybody thought the world was going to end and they were taking their money out and locking themselves in the losses and hiding underneath their bed with cash, and I'm not trying to be insensitive to that. I get it. It was a scary time, right? My wife and I, we actually invested all of our extra cash, right? Because all of the best companies in the world were on clearance. Let's just say for easy numbers that Apple stock, and this is not the number that goes for way more than this, but, sells for $10. When the market's down, right? Particularly in COVID, when the market was down, Apple stock was selling for $2, right? If the world didn't end, Apple was going to bounce back just like the rest of the world. And not only was that going to recover, it was going to exceed that dollar amount that it was at before it actually dropped to the $2, right? So it was a great opportunity to buy in on the dip, to buy in during the bear market. And so, I'm going to talk here in a second about why the stock market actually goes down. And a lot of times it usually has nothing to do with the companies itself and just what's going on in the world, which makes it even more of an opportunity to purchase when the market is down, because the companies are fine, right? They're going to be just fine, right? Maybe sometimes it does drop because of that, but let's dive into that though. Why does the stock market go down? And I'm going to teach you how to avoid losing money when it does. Okay. So there's a concept in economics called supply and demand. So supply and demand of stocks. Right. And so when the demand for something goes down, the price or value of it goes down. If nobody wants something, it's not really worth much. But when somebody wants something and there's limited stock or limited availability of that, then the price goes up. For example, let's just say, I'm just making this up, but Ferrari makes 10 new Ferraris. There's only 10 of these in the world, right? That's going to be incredibly more expensive than the average Ferrari, right? Because the supply is low. And then because the supply is low, and this is going to be a beautiful vehicle probably, right? Then the demand's also going to be high. So when the demand for something is high and supply is low, that causes the price to go up. I've seen this with my own services, inside the Good Steward program or JFF, my company. Back in the day when I was only taking one-on-ones, I had 20 one-on-one clients and 10 people on a waiting list. And I was like, okay, the demand for my services is high and the supply is low. Like, I literally don't have any more spots left on my calendar. So I doubled my prices, right? That's supply and demand. And so when something is going wrong in the world or in a specific company, people often sell off their stocks. This decreases the demand for the stocks, right? And so let me kind of break that down here a little bit. Let's just say there's a big announcement made right now about Apple and a scandal happens, or even like you see it kind of actually, let me back up and talk about Chipotle. Right, you see Chipotle just having bugs and stuff in their food all the time, and it sucks to say it out loud because I love Chipotle. But like when that happens, there's something wrong with a company. If that's happening, there's an issue there, right? Again, I love to show grace to businesses, but like there's an issue with that company, and that gets into the news. And then what happens? People start to sell off their Chipotle stock because they don't trust the company anymore. And when they start to sell off their Chipotle stock, what happens? The demand goes down because people are selling it. That means they don't want it. Right. So demand goes down, supply goes up because they're selling it off and there's now a ton available. And what happens is the price goes down. The value goes down. Right. If people are selling off their Chipotle stock, that means nobody wants it. If nobody wants it, the value goes down, the price drops. And that's when the stock market or the stock of that particular company drops. Right. So sometimes you do see stock prices or values drop because there is something wrong with that company. Right. It does happen from time to time. Most times when the stock market drops, it has nothing to do with those companies, but everything to do with what's going on in the world. Like when there's a war about to start possibly, or when COVID broke out, or I'm trying to think of a couple of other examples recently that have happened in society, right? Sorry, I'm blanking now. But let's just use COVID and let's just use this possible war here coming up, right? At the time that I'm shooting this, it seems like things are settling down, but like if one does break out, what's going to happen is that people are going to get really scared. They think the world's coming to an end and they think that they need to have cash in their hand in case the banks lock up and the stock market completely crashes and they're out of all of their money. So what happens? They start to sell off their stock to have cash in their hand to prepare for a catastrophic event, right? They're operating out of fear, out of what's happening in the world. And so when that happens, everybody is selling their stock, which is then showing that their demand for that stock is low, or stocks in totality. People are selling it because they want their cash, right? And then what happens is the stock market drops, because if the demand is low for something, the value or the price of it drops. So if the demand is low because people are selling off their stocks out of fear, then the price is going to drop and the stock market drops in totality, right? And so just giving you an example there, that most times when the stock market drops, it's because something happens in the world, right? And give you an example. When 9/11 happened, right, the stock market dropped a ton, kind of understandably, right? And it dropped an absolute ton. But what nobody talks about is 57 days later, it made a complete recovery. 57 days, we're not even talking 2 months, because there was nothing wrong with these companies. There was nothing wrong with the stock market in totality or at all, probably. And the issues was there was issues in the world. And once people got over their fear, they put their money back in the stock market, right? The demand went back up, the stock market went back up. And so I've kind of alluded to this already, but why do people sell stock, right? Number one, fear, I just alluded to, right? That's very common. It happens a lot. Like when things happen in the world, like things are getting scary, Trump's putting tariffs on stuff. Again, I'm not getting here to get politics, not saying he's right or wrong. There's, world war is going to break out. There's a pandemic that happens, right? People are losing jobs, whatever it is, right? What happens is people operate out of fear. They sell their stock to cut their losses because they think the market's going to completely crash, and they think that they need money, cash on hand instead of stocks invested to be able to help them deal with what the world's going to throw them. That's fear, right? A lot of times it's strategy. Right? There's a lot of times, dude, I've sold stock before too. I know a lot of smart people do, and they do it out of strategy because there's a reason to sell. That business isn't doing as well. We took a chance on a risky startup and it's starting to decline, and we want to cut our losses before it completely goes out of business, right? Or, for example, I sold Nike stock a couple of years ago and got out of it because Hoka and Lululemon and all these other companies were starting to compete with them, let alone beat them out. And I'm like, they're not holding on to the market share very well. So out of strategy, I sold, and it was a good sale because it ended up dropping even more after that. And I cut my losses before it was too late. And so those are two reasons why people sell, right? Fear and strategy. And when that happens, demand goes down because supply is going up. Because if you're selling your supply, it means now there's more available, right? And then prices drop with it. And so let me teach you how to not lose money in the stock market, right? The majority of mistakes people make with their finances are when they make emotionally charged decisions. And most times, the number one emotion that is in the driver's seat when we make those financial decisions is fear, especially with the stock market. Fear is the biggest emotion that leads people to making mistakes in their finances in totality, but definitely in the stock market. And when things start to become expectations, they're no longer problems, right? And so I've tried to equip you with information today to align your expectations to then hopefully align your actions. And so I can almost guarantee you that every 3 to 5 years, we're going to hit a bear market, which means that the market's going to drop by 20% or more, right? I'm telling you that, right? I'm also telling you that's actually for savvy investors, right? That's the best time to actually buy in, not sell off and get scared. I'm also telling you is that after every winter comes spring, and this is historical data. Like you can just look this up. In the past 75 years, every 3 to 5 years when a bear market happened, every single time, not 9 out of 10 times, not 95% times, 100% of the times, it was followed by a bull market, which was a full recovery, if not more, right? And so the last thing, again, lining your expectations is don't operate out of fear. Do not sell out of fear. Don't align your investment strategy with other people who are not savvy investors that are often known to sell out of fear. Right? And ask yourself, is this strategy or is this fear, right? When you're going to make moves in the stock market, even when it comes to avoiding investing, right? Let's put down the topic of selling, right? You got to get in the first place, right? You got to ask yourself, am I avoiding out of fear or strategy? Most times it's probably fear. And so I wanted to equip you with some facts today that will decrease your fear, limit your mistakes, and help you capitalize on great opportunities when everyone else is panicking, right? So how not to lose money in the stock market. Simply put, don't act out of fear. When it comes to investing in the first place and selling when things get a little scary. All right, so let me bring this plane down for a landing and talk about the most important thing here is like, how does this relate to the Bible? Number one, the Bible says a bazillion times, and Jesus also says it multiple times, do not be fearful. Do not be fearful, right? And so if we're going to act out of fear, we're doing the opposite of what God, Jesus, and the Bible are telling us. The second thing is God calls us to multiply, not maintain. And I talked about this in my podcast episode called Investment Advice from Jesus. If you haven't heard that, go back to it, listen to it, download it, share it with somebody, and they'll thank you later, right? I talk about in there the parable of the talents, which is a story that Jesus tells in the Gospels, right? And it basically just tells that the moral of the story is that God values multiplication, not maintenance. Investing is how you multiply the money that God has blessed you with instead of hiding and maintaining out of fear. Multiplication, not maintenance. Number three, we want to act with diligence and responsibility. Again, I'm not saying here go invest your money stupidly. I'm not saying here just go throw a whole bunch of money at the stock market, right? Do not do that. Do your research. Be well advised, right? Warren Buffett always says, don't invest in something you don't understand, right? Don't buy the hype. Don't buy, the Reddit stocks, right? Like actually ask yourself, is this a quality company that's going to do well over the years? Which leads into another piece of advice that I follow from Warren Buffett, where he says, don't buy fair companies at a great price, buy great companies at a fair price, right? Because if you're buying into great companies, you can almost guarantee that you're going to win over long hauls, right? Think about Amazon, think about Apple, think about Meta. They're always going to get the best interns out of Ivy Leagues, the best college graduates out of Ivy Leagues. They're always going to have the best middle managers because they're going to develop those Ivy Leagues that I just talked about into their middle managers, right? If not, recruit them externally. And they're always going to have the best executives, CEOs, CFOs, chief marketing officers, and they have a mass amounts of resources, money, time, energy, and humans to make sure that they're always going to win. They may go through a bad season, a bad year, maybe even a bad couple of years. But those types of companies, right, over the long haul are going to win, and that makes them great investments. And the last thing is just generational wealth. Proverbs literally says, a wise man leaves an inheritance to his children's children. And it's almost impossible. I don't want to say almost impossible, but investing in the stock market and understanding it in the first place, then to make quality investments is a great tool to leave generational wealth like God calls us to do. And so I want to bring this plane down for a complete landing now and just remind you, today's episode was called Understanding the Stock Market. It seems like a confusing topic, and a lot of times it's made to sound like that on purpose. We'll talk about that maybe in a different episode, but it's finances in totality, particularly the stock market, are not that hard. They're not that scary. It just takes the right person with the right intentions in mind, with the right teachings to teach you it in a way that not only makes it feel easy, but makes you feel empowered around the topic. And I hope that's what happened here today. And I hope I was able to relate this topic to the Bible and to God's word to ultimately continually to teach you guys on how to manage money based on biblical wisdom without all of the outdated, fearful, and restrictive feelings finances usually brings on people. And so if that's something that you're interested in, right, as you guys know, I own a company called Journey to Financial Freedom, or JFF, right? We do financial coaching for the faith-based and ambitious, and we have an incredible, well-oiled machine of a program called the Good Steward Program. And this will teach you everything you need to know about money management, particularly in a way that's rooted in biblical wisdom, without all of the shame, guilt, fear, or overwhelm, confusion, none of that, right? None of that. We teach you how to manage your money, not only rooted in biblical wisdom, but in a way that you can honor God, live your life, and make financial progress at the same time. And we are darn good at it. There's a reason why we have 130 active clients and why almost 1,000 people have went through the program in over 5 years. And so the client, my brother was recently in town, and he asked me, what's the difference between your clients that have great results and your clients that maybe don't get great results? And my answer, simply put, was they listen to what I tell them to do over long periods of time consistently. And so let's start your journey. Go to my website, journeytofinancialfreedom.co. No M. journeytofinancialfreedom.co. You'll be able to click right there, book a consultation with one of my team members. We'll gather all the information we need about you. You can ask all the questions that you want to ask, and we'll help you make a decision if the Good Steward Program is the right fit for you, and if it is, how to best move forward. And so before we get there, let me end this episode and just say thank you all again for coming back to another episode of Wisdom is Wealth. As always, like, subscribe, comment, and please share. Also, too, one quick favor I want to ask. Please leave us a 5-star review on whatever platform you're listening to us on. If it's Apple Music or Apple Podcasts, please listen to that. It's pretty crazy how awesome and successful God has decided to make this podcast. We are downloaded now in 35 different countries and 340 different cities. Right? I don't even know some of these cities, let alone pronounce them. It's just such a blessing and so cool. We're only at like episode 70 something, right? But the crazy part is we don't have a single 5-star review. All right, so I'm going to count on y'all. Please give us some 5-star reviews. That would be amazing. I appreciate y'all. I love you. I appreciate the support, and we'll see you in the next episode.